V. Srivastav, the Executive Vice President and Fund Manager Equity at UTI AMC is joining us on the show right now. Hi, good to be speaking with you. To begin with, what do you make of the market mood right now? Usually just ahead of Diwali, we expect a bit of a vibrancy, some sparkling, kind of gains coming in through. Not the case this time around. Very sideways, and looks like that's going to be the mood going into Diwali as well.
Yeah, hi. Good morning. I think if you look at the markets have given a good run specifically in the last 12 to 18 months. And we have come to a point where valuations are above mean at around 20-21 times 1 year forward. And also the fact that globally, we are as an emerging market within the emerging markets, we are clearly looking expensive vis-a-vis other markets where a lot of interest and attraction is there amongst the FIIs. Also, the earnings growth this quarter specifically is expected to be muted, driven by a lot of cyclical sectors. So all these factors are kind of contributing to a very kind of a muted expectations in the shorter run, and not very great enthusiasm as of now, as you typically see before any festive times.
Given the sharp fall that we had seen in the last 1 month in the markets, does any sector or does at least the large cap look attractive to you, or any sectors that look attractive to you?
Yeah, I think in terms of sectors, we still believe that banking sector represents a very good attractive opportunity right now. While the results are not expected to be very great in terms of there is likely to be pressure on NIMs, but what we feel is that the valuations are very reasonable, the banks are well capitalized, and that is an ultimately a macro play on. I mean, if we believe that there's going to be a strong GDP growth and reasonable inflation, I think banking sector will benefit from the macro trends. And the valuations, at least vis-a-vis the market levels, are extremely attractive, specifically for the large cap private sector banks. So we believe that bank represents a very good opportunity. We also have an overweight position in healthcare, specifically on the export-oriented healthcare companies, where we believe that there is a good amount of momentum building up, and there is a lot of consolidation happening in the US generics market. So healthcare also represents a good opportunity. And lastly, telecom, we do believe that, given the expected rise in the ARPUs, the sector will hold up well because there could be good amount of earning upgrades happening and valuations are still reasonable vis-a-vis the market.
In fact, since we're talking about telecom, hold that thought, Srivastav. There is this exclusive buy that we're getting from Kumar Mangalam Birla speaking at the IMC. Let's quickly listen into that and then we'll continue our conversation further.
I think with a sense of security that their data, for example, personal information is safe. We don't think it's impossible. In fact, I would say very confidently that it's around the corner. And we've been written off several times in the past. It's about time that now is, we shed that impression about that.
Okay, that's what Kumar Mangalam Birla has to say, that they have been written off multiple times in the past, but they've managed to sail through. And perhaps it's not right to any more question the revival and survival of the company, because they're very committed and confident about that. But coming back to our conversation, and I wanted better sense from you regarding a couple of other sectors, financial sector ancillaries. I mean, we have seen the kind of run-up BSE has seen off late in the last 5-6 sessions itself. CDSL has been fired up. Today, if you look at a Motilal Oswal, a 361, a Angel One, they're all doing quite well. And this theme of financialization of savings is a long-term one. Would you concur? And with respect to that, would you recommend people to buy into this sector?
Yeah, so if you look at the financials, we are also equally positive on the NBFC side because I think they are the biggest beneficiaries of a rate cut, and some of the niche NBFCs like auto NBFCs have kind of headroom to grow. And we are also positive on the non-lending financials, specifically life insurance. We are quite positive. I think the valuations have corrected significantly over the last 3 years. We also believe a large part of the regulatory overhang is also behind us. So we should start looking at good growth numbers, given the fact that a large part of the regulatory overhang is behind us, and valuations are very attractive vis-a-vis the history in the last 3 to 5 years. AMCs also, we believe that the earnings momentum is very strong. I think within the capital market space, they are relatively attractive versus the other subsegments. So these AMCs also we continue to be positive within our overall portfolio.
So you also seem to be positive when it comes to the cement space. Now, other than the capex trigger, is there any other trigger because of which you're so positive? Because I have not seen any price hike at least benefiting this sector for quite a long time now.
Yeah, see, as a strategy, we follow more of a value approach. Now, cement, we believe that cyclically it's going through its worst times. So, we are having the worst of, we have not seen any big pricing hikes. But what we do believe is that going ahead, they would see some benefit of the raw material easing. There has been a significant raw material easing in the last couple of quarters, which where the companies would see the full benefit. And hopefully, with the revival of the economy, specifically on the infra side over the next couple of years, we should see demand coming back. And yes, I think the valuation, specifically in the mid cap cement side, is quite attractive vis-a-vis the overall market. So we continue to be positive on cement, specifically on the mid cap side.
So that's a take coming in as far as cement sector is concerned. In terms of the other, basket that one needs to look at, PSUs as a pack were clearly top of agenda for a lot of investors. It kind of fell off since the election verdict is out. What's the view on PSUs now, especially defense, manufacturing names?
See, I think I don't look at PSU as a specific asset class, but yes, every sector where there is an opportunity for me to invest, I do evaluate PSUs within that. So I think PSUs 4-5 years back suffered from an extreme undervaluation. They went to a fair valuation, and there was probably a lot of pockets of overvaluation. So within PSUs, I think where I believe we'll see value is probably a certain PSU banks, a couple of them, where one could see value because they have corrected in the last 6 months. The second part is also the OMCs because, my belief is that crude prices will continue to be benign over the next couple of years. So OMCs could also be a good opportunity as far as PSUs is concerned. But a lot of sectors, there is an overvaluation, specifically in the capital goods. I think the PSUs trade at very high multiples. I think the earnings momentum is strong, but these are cyclical sectors and they could hit a bump in 2-3 years down the line, which probably the market is not factoring. So PSUs is mixed. There are pockets where there is some level of undervaluation. There are also equally pockets where there's a huge overvaluation. So as a pack, I will not say they are cheap, but yes, one needs to evaluate each company wise, within sector wise, how they are and take a call accordingly.
Thank you, sir, for joining us and for giving us all those details and for putting things into perspective.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.